On the evening of June 19th, 2020, a man arrived at a small airfield outside Vienna. He carried only hand luggage. He paid the pilots nearly 8,000 euros in cash. He declined to take a receipt. His name was Jan Marsalek. Until 48 hours earlier, he had been the chief operating officer of Wirecard, Germany's most celebrated financial technology company, a firm valued at 24 billion euros, a member of the prestigious DAX 30 index. Now, he was running. Wirecard had just announced that 1.9 billion euros was missing from its accounts. The sum represented every euro of profit the company had ever reported as a public company. There were only two possibilities. The money had been stolen, or it had never existed. 4 days later, Philippine immigration records showed Jan Marsalek entering the country. He had told colleagues he was going to Manila to track down the missing funds, but like almost everything about Wirecard, the records had been faked. Corrupt Philippine immigration officials had been paid to stamp his arrival. He was never there. Marsalek held at least 8 passports, including diplomatic cover from Grenada. His departure from that Austrian airfield is the last confirmed instance of him using his real name. Interpol issued a red notice for his arrest. He was placed on the EU Most Wanted list. But Jan Marsalek didn't vanish into thin air. He vanished into Russia. And the story of how a company run by a suspected spy became Germany's national champion, defended by regulators, championed by politicians, worth more than Deutsche Bank, is a story about what happens when an entire country decides to believe a lie. Wirecard was founded in 1999 in the Munich suburb of Aschheim. It was the dying days of the dot-com boom, when internet companies traded as if they'd discovered how to cure cancer with unicorn horns. The company's original purpose was simple: process credit card payments for online merchants. Specifically, merchants that traditional banks refused to touch. Pornography, online gambling, industries that were growing alongside the internet but couldn't find anyone willing to handle their money. Wirecard would fill that gap. In 2000, a 20-year-old Austrian named Jan Marsalek joined the company. He had no formal qualifications, no work experience, but he was a talented programmer, hired to oversee Wirecard's transition to mobile technology. The first warning sign came almost immediately. Wirecard's systems crashed. Engineers traced the problem to Marsalek's desk. According to later reporting, he had routed all of the company's internet traffic through his own personal computer, in what he claimed was an accident, a setup ideal for snooping. But Marsalek couldn't be fired. He was rebuilding the company's payment software from scratch. The project was too important, too far along to start over with someone new. So they kept him. In 2002, Wirecard's offices were burglarized. The company, already struggling after the dot-com crash, was forced into insolvency. An Austrian businessman named Paul Bauer Schlichtegrull, who had a background in the adult entertainment industry, bought what remained for €500,000. He kept the Wirecard name. He hired a consultant from KPMG named Marcus Braun as CEO. And he kept the young hacker, Jan Marsalek. Marcus Braun was everything Marsalek was not. Tall, awkward, quiet. He claimed to have a PhD in social and economic sciences. He wore a black turtleneck everywhere, deliberately evoking Steve Jobs. He spoke about network effects and platform convergence and artificial intelligence with the conviction of a true believer. The German press would eventually call him the Steve Jobs of the Alps. But Wirecard's early culture was something else entirely. Marsalek took new hires for bottle service at Munich nightclubs. He sent clients back to their hotels with models in tow. When Wirecard signed a live streaming pornography service as a client, Marsalek's colleague, Oliver Bellingcat, hooked up his laptop to a television in the office at 10:30 in the morning and paid for a private session. "Touch your nose," Bellingcat and another salesman instructed the topless woman on screen, testing if the service was really live. The woman complied. "Touch your nose" became a running joke at the office. In 2005, Wirecard needed capital. But a traditional IPO would require transparency and scrutiny the company wasn't prepared for. So Braun chose a backdoor. Wirecard merged with a struggling German call center company that was already listed on the Frankfurt Stock Exchange. Once the merger completed, the call center's operations ceased overnight. The new entity was renamed Wirecard AG. Like a parasite devouring its host from the inside, Wirecard had emerged to walk the stock market in its place. Within months, Bauer Schlichtergroll, the man who'd bought the company out of bankruptcy, sold his entire stake. He'd seen enough. In 2006, Wirecard acquired a small German bank called McCrum for 18 million euros. Industry observers thought Braun had overpaid. The company could have applied for its own banking license for a fraction of that price. But Braun wasn't paying for a license. He was paying to avoid scrutiny. The acquisition let Wirecard become a bank without undergoing the regulatory examination that a license application would require. It could now issue credit cards, handle deposits, process payments, all without relying on third parties. More importantly, it created what one investor report later called a bridge between online and offline cash. For a company with roots in porn and gambling, industries that generate enormous amounts of money that people would prefer not to trace, owning a bank was very, very useful. By 2007, Wirecard was expanding across Asia and the Middle East. It acquired payment processors in Singapore, the Philippines, Dubai, small companies in jurisdictions where regulatory oversight was limited. The company spoke of third-party acquirers, partners who processed payments on Wirecard's behalf in markets where it lacked licenses. These partners were located in far-flung places. Some operated out of suburban homes, others from empty offices above bus stations. They were, as it would turn out, difficult to audit. Here's what you need to understand. By 2018, Wirecard would claim that more than half its profits came from these third-party partners in Asia. If those partners were fake, if the transactions never happened, then Wirecard's entire financial picture was a lie. The question was whether anyone would look closely enough to find out. Dan McCrum often jokes that his marriage was a minor fraud. His wife met him when he was a banker, but she ended up with a journalist instead. He'd worked at Citigroup for 4 years in his 20s, long enough to look around the room and think, "There's nobody here I want to be." In July 2008, as a young reporter at the Financial Times, he witnessed the collapse of Lehman Brothers. By year's end, Bernie Madoff's Ponzi scheme had unraveled. "It felt as if we were through the looking glass," McCrum later wrote. If a fraud of that magnitude was hiding in plain sight, then anything could be fake. In the summer of 2014, a hedge fund manager asked McCrum a question. "Would you be interested in some German gangsters?" He paused. "Be careful." McCrum began investigating. He flew to Bahrain to find a company called Accusation Services, which was supposedly licensing Wirecard software for 4 million euros a year. There was no trace of Accusation at its listed address. He tracked down the company's lawyer to an office behind a fried chicken joint. The lawyer barely remembered the name. Accusation, he muttered, as if hearing it for the first time. The woman listed as Accusation's founder, a local actress, had no recollection of any contract. McCrum concluded that Accusation's entire existence was fabricated. In 2015, McCrum published his first series, House of Wirecard. The response was muted. Even sophisticated financial readers struggled to follow the complexity. One commenter wrote, "This article could do with a paragraph that states, in plain English, what the author's point is." Wirecard's response was less ambivalent. McCrum began receiving phishing emails designed to compromise his devices. Anonymous blogs appeared, accusing him of financial misconduct and collusion with short sellers. He started logging license plate numbers, checking hedgerows for cameras. He slept with a hammer under his bed. By 2019, McCrum was working in a windowless room at FT headquarters. He used an air-gapped computer, disconnected from the internet entirely. Colleagues avoided saying the word Wirecard aloud. They wouldn't discuss the story with phones in the room. McCrum called the investigation Project Ahab. Wirecard was his white whale. A team of 30 private investigators was following him through London. He learned to shake tails by ducking into tube stations. He refused to stand near the edges of train platforms. He'd learned that Marsalek had connections to Russian intelligence. He knew how stories involving Russian intelligence sometimes ended. In 2018, Marsalek made an extraordinary offer. He arranged a lunch with Paul Murphy, McCrum's editor. Wagyu steak, fine wine. Marsalek paid with a credit card made of solid gold. Through intermediaries, Marsalek let it be known that he would pay $10 million to make the Wirecard stories go away. Murphy declined. But Marsalek had something else to share. A few months later, Marsalek summoned Murphy to Germany. In a private dining room, he handed over a stack of documents. They contained official Russian government talking points about the Skripal poisoning, the nerve agent attack on a former Russian spy in England. The files were marked classified. They also contained the chemical formula for Novichok. "Where did you get these?" Murphy asked. Marsalek smiled. "Friends." While McCrum investigated, Germany's financial regulator was investigating too, but not Wirecard. In 2019, after the FT published evidence of forged contracts and falsified accounts in Wirecard's Singapore office, BaFin did something unprecedented. It banned short selling of Wirecard stock. It filed a criminal complaint against McCrum and his colleague Stefania Palma for market manipulation. The regulator was protecting the company from the journalists trying to expose it. It was at that moment, a German parliamentarian later said, that they sided with criminals. The message to investors was clear. If Germany's financial regulator was going after the journalists, not the company, then Wirecard must be legitimate. A member of Deutsche Bank's supervisory board wrote to Marcus Braun, "I read in the FT what a naughty boy you are." He added a winking emoji. "I've just bought Wirecard shares. Do this newspaper in." In September 2017, a lawyer named Pav Gill started a new job. He was Wirecard's first head of legal for Asia Pacific. It seemed like the opportunity of a lifetime. Gill had grown up in Singapore, the only child of a single mother named Sokbir Kaur. They lived in subsidized housing. His mother worked multiple jobs to send him to the best schools. He'd made it, graduated from the National University of Singapore in 2008. Worked at elite Magic Circle law firms in London and Dubai. Now he was in-house counsel for a German fintech giant. The first thing Gill noticed was the security. Guards confiscated passports before anyone entered buildings. Only a few access passes were issued each week, with access limited to designated floors. "I thought the measures were a bit extreme," Gill later recalled. "Then again, you don't think too much about it." The second thing he noticed was Ido Kurniawan. Kurniawan ran Wirecard's Asia-Pacific accounting and finance department. His CV didn't add up. His first 4 years were at an unspecified public audit company. He couldn't speak German. He could barely string together a meaningful email in English. Yet he was the global head of international finance, the third most powerful finance person in a multi-billion euro company. What did he do to snag this job? Gill wondered. Kurniawan hired young women from Indonesia and Malaysia, inexperienced staff who wouldn't question their boss. He boasted about having married into a family of drug dealers in Indonesia. Once, he told Gill, Wirecard has been known to make people disappear. Then a woman from the finance team approached Gill. Kurniawan had given a presentation. Using a whiteboard and a marker, he had sketched out exactly how to commit financial crimes. The technique was called round-tripping. Money would move from one Wirecard subsidiary to another, sometimes through shell companies with no connection to Wirecard, creating the illusion that each account was generating revenue. The woman had been asked to execute these schemes. She wanted to know if it was legal. It was not. Gill contacted his supervisor in Munich. They agreed to commission an internal investigation using an external law firm. They called it Project Phoenix, the immortal bird of Greek mythology. "We thought these are a few bad apples," Gill later explained. "Once we cleared them, Wirecard would rise from the ashes. They were wrong. Word of the investigation reached Jan Marsalek. He took it over, buried the findings. Gil's life became hell. Kurniawan and others shouted at him. They insisted he take a business trip to Jakarta, for no apparent legitimate business reason. This was particularly sinister. Kurniawan had boasted about his connections to Indonesian drug dealers. Then Gil received 2 anonymous phone calls from Munich. "I understand you're being told to go on a business trip to Jakarta. We would strongly recommend you don't go, because you won't come back." Gil refused the trip. 4 days later, he was forced to resign. He left Wirecard on September 18, 2018, exactly 1 year after he'd started. That same month, Wirecard joined the DAX30, replacing Commerzbank. It was now officially one of Germany's 30 largest companies. After leaving, Gil tried to move on. Find a new job, put Wirecard behind him. But Wirecard wouldn't let him go. He was followed. His mother was followed. Job interviews turned surreal. Interviewers who seemed interested only in what he knew about Wirecard, not his qualifications. He realized the interviews were fake. Wirecard had created bogus job postings, using contacts at other companies, designed to trap him into violating his non-disclosure agreement. "They didn't let us move on," Gil later said. "They really forced us into that position." It was Gil's mother who initiated the whistleblowing. Sokbir Kaur, the woman who'd worked multiple jobs to send her son to the best schools, was furious. From her son's living room sofa, she began reaching out to journalists. She wrote to the Wall Street Journal. No response. She contacted Claire Rucastle-Brown, the journalist who'd broken the 1MDB corruption scandal. Brown connected her to Dan McCrum at the Financial Times. When Gil found out what his mother had done, he was horrified. "Oh my God, Mom, what have you done?" But he had saved everything. 70 gigabytes of emails, the entire internal investigation file. He met McCrum near a public fountain in Singapore. The rushing water would shield against audio surveillance, and handed over the data. It was the break McCrum had been waiting for. To understand how Wirecard stole billions, you need to understand what they actually did. At its core, Wirecard was a payment processor. When you buy something online with a credit card, a company like Wirecard sits between the merchant and the bank, handling the transaction and taking a small fee. It's a legitimate business. Visa and MasterCard are built on it. But Wirecard's legitimate margins were almost non-existent. The real money came from somewhere else. By 2019, more than half of Wirecard's reported profits came from just 3 partners in Asia. Companies in Dubai, Singapore, and the Philippines that supposedly processed payments on Wirecard's behalf. When FT journalist Stefania Palma flew to Manila to find one of these partners, a company called PayEasy, she discovered its headquarters was shared with a bus company. Another partner, ConePay, was registered to a private home in a remote village surrounded by rice paddies. 2 Filipino men were grooming a poodle and a Pomeranian when she arrived. Neither had heard of ConePay. Then a family member produced some mail. A document from Wirecard Bank showed ConePay's account balance, €30. The scheme was elegant in its simplicity. Wirecard would claim that these partners were processing billions in payments. Revenue would flow from the partners to Wirecard, appearing as profit on the books. But the partners didn't exist. The transactions never happened. The money was fictional. To make the numbers work, Wirecard needed cash to show auditors, so they used a technique called round-tripping. Real money, from investors, from bond sales, from the legitimate parts of the business, would be sent to escrow accounts in Asia, supposedly held by trustees. But the trustees were controlled by Wirecard. The money would circle back, appearing as revenue from the fake partners. The €1.9 billion that went missing in June 2020, it was never in those Philippine bank accounts. The accounts didn't exist. Ernst & Young audited Wirecard's books every year from 2009 to 2018. They signed off on everything. How did they miss it? They never actually verified the cash. For years, EY relied on documents and screenshots provided by Wirecard itself. They accepted confirmations from trustees without checking with the banks directly. When the KPMG special audit finally tried to verify Wirecard's Asian operations in 2020, they hit a wall. They couldn't confirm that the revenue was real. They couldn't confirm the cash existed. KPMG reported that they were unable to verify the lion's share of Wirecard's reported profits from 2016 to 2018. The auditors cited obstacles. Here's how casual the fraud had become. Wirecard was a bank with no branches. It kept physical cash in a safe at the office. Executives distributed money to business partners by hiding it in grocery bags. Jan Marsalek preferred to pay in cash, always. In September 2019, Chancellor Angela Merkel traveled to China on a state visit. She carried an unusual request. Wirecard was trying to acquire a Chinese company, and Merkel personally raised the matter with President Xi Jinping. She was lobbying on behalf of a German fintech that, at that very moment, was under investigation by journalists for systematic fraud. She had been persuaded to do so by Karl Theodor zu Guttenberg. Zu Guttenberg was Germany's former defense minister, a rising star who'd resigned in 2011 after his doctoral thesis was found to be plagiarized. He'd reinvented himself as a lobbyist. Wirecard was his client. A parliamentary investigation later concluded that Merkel had been too naive. She testified that she had no reason to assume serious irregularities at Wirecard. This was 6 months after the Financial Times had published evidence of forged contracts in Wirecard's Singapore office. The political connections ran deeper. Klaus-Dieter Fritzsche, a former state secretary for intelligence services, had become a security advisor to Wirecard. He confirmed that his government and intelligence contacts had been useful in his new role. Olaf Scholz was Germany's finance minister. He oversaw BaFin, the regulator that had banned short selling of Wirecard stock and investigated the journalists instead of the company. A parliamentary report found that Scholz's ministry sought reasons not to investigate rather than take action. The report ran to 675 pages. It concluded that Germany had suffered a collective supervisory failure involving regulators, prosecutors, and lobbyists. Scholz denied direct responsibility. He later became Chancellor of Germany. Why did Germany's institutions fail so completely? Part of the answer is structural. BaFin didn't have direct authority to investigate corporate financial reporting. That responsibility was delegated to a private sector body. But the deeper answer is cultural. Germany is wealthy and powerful, with some of the best engineers in the world. But when you think of major German companies, BMW, Mercedes-Benz, Volkswagen, Siemens, they have one thing in common: they're old. Germany had no modern tech champion, no Google, no PayPal. The country was falling behind in the digital economy. And then came Wirecard. Here was a German company that understood the internet, that was growing faster than Silicon Valley giants, that had made payments exciting. Politicians were proud. Hey, we have a fintech company. The desire for a success story made it easier to look past warning signs. Anyone who questioned Wirecard was questioning Germany itself. The end came fast. On June 5, 2020, Munich prosecutors raided Wirecard's headquarters. They were investigating Markus Braun and 3 other executives for fraud and market manipulation. The KPMG special audit had been published in April. It couldn't verify the Asian operations. It couldn't confirm the cash. But Braun had told investors the audit was essentially an exoneration. He promised that EY would sign off on the 2019 accounts as usual. On June 18th, the day the audited accounts were supposed to be released, EY made an announcement. They could not verify that 1.9 billion euros existed. The money was supposed to be held in 2 Philippine bank accounts. EY had finally contacted the banks directly. The banks replied that Wirecard's accounts did not exist. Wirecard's stock fell 60% in a single day. The company scrambled. They needed to prove they controlled the funds. They arranged a video call with the Philippine banks. What happened next captures the absurdity of the entire fraud. According to reporting, Wirecard hired Filipino actors. The actors reportedly posed in fake bank cubicles, pretending to be bank employees, pretending to confirm that Wirecard's money was safe. But the real auditors had already contacted the real banks. The game was over. On June 22nd, Wirecard issued a press release. The management board assesses on the basis of further examination that there is a prevailing likelihood that the bank trust account balances in the amount of 1.9 billion euros do not exist. The understatement of the century. Marcus Brown resigned on June 19th. He was arrested on June 23rd, accused of fraud and market manipulation. He told the 5,500 employees of Wirecard that he had been hit the hardest by the fraud. The poor billionaire. One employee who was there later recalled, "When Marcus Brown said that he and Wirecard were victims of fraud, I didn't believe it for a second. That was the wake-up call." The employees had believed in the company. They'd felt pride in working for Germany's tech champion. They'd dismissed the FT reports because BaFin, their own regulator, had told them the accusations were fabricated. "We felt very confident that the accusations were lies," the employee said. "I place much of the responsibility on BaFin, which gave us all a feeling of security." On June 25, 2020, Wirecard filed for insolvency. It was the first member of the DAX 30 ever to do so. Within days, lists began circulating through Munich's tech companies, spreadsheets containing the names and skills of Wirecard's 5,500 employees. "It was like shopping at a supermarket," one observer noted. Thousands of innocent people had lost their jobs overnight. They'd done nothing wrong. They'd worked on real projects, built real software, processed real payments for real customers. But a few people at the top had invented everything else. At its peak in 2018, Wirecard stock traded at 193 euros per share. By the end of June 2020, it was worth 31 cents, a decline of more than 99%. Fabian Schmidt was a 37-year-old anesthesiologist. In May 2020, just weeks before the collapse, he went all in on Wirecard. He was saving for a bigger house. He'd watched Marcus Braun speak and found him convincing. He lost everything. "BaFin literally did nothing," he said. "I was as stupid as they were, but it's their job." More than 50,000 shareholders submitted claims in insolvency proceedings, seeking 8.5 billion euros in damages. SoftBank, which had invested 900 million euros just a year before the collapse, lost nearly everything. Some investors lost their retirement savings. They had trusted a DAX 30 company audited by one of the Big Four accounting firms, defended by Germany's financial regulator. They had done everything right. One investor described his thinking, "I invested in Wirecard again after BaFin said it would take action against the Financial Times. I kept thinking, what nonsense the journalists were making up, with some fishing huts where companies should be based. I thought that neither the fraudsters nor BaFin could be so stupid as not to investigate within half a day." He paused. "Unfortunately, I was proven wrong." Marcus Braun's trial began in December 2022, held in a bomb-proof underground courtroom at Stadelheim prison in Munich. He maintains that he is a victim, that Jan Marsalek orchestrated everything without his knowledge. The prosecution argues that Braun was central to the fraud, that he approved the acquisitions, signed off on financial reports, and continued to present growth stories to investors even after internal discrepancies were raised. In September 2024, a court ordered Braun and two other former executives to pay 140 million euros in damages for breaching fiduciary duties. The criminal trial has stretched past 170 court dates. A verdict is expected in 2026. If convicted, Braun faces up to 15 years in prison. Ernst & Young, the auditor that signed off on Wirecard's books for a decade, faces lawsuits from tens of thousands of victims. Their defense: it was an elaborate and sophisticated fraud that deceived them. Critics point out that EY never directly verified the cash in the Asian trustee accounts. They accepted screenshots and documents provided by Wirecard itself. A subsequent investigation found that EY consistently failed to observe basic principles of auditing. Justice, when it came in pieces. In Singapore, where much of the fraudulent accounting had been executed, authorities secured convictions. James Wardana, Wirecard's international finance manager, received 21 months. Chai I Lim, head of finance for Wirecard Asia, received 10. In the United States, Avaram Azari, the private investigator who had orchestrated the hacking campaigns against journalists and short sellers, was sentenced to 80 months in federal prison. The FinCEN files, a massive leak of suspicious activity reports from banks around the world, flagged a Turkish bank called Aktif Bank for transactions connected to Wirecard. The report suggested the financial infrastructure of the fraud extended far beyond Munich. There was one more name connected to this story. Christopher Bauer was Wirecard's former Asia manager. His father, Paul Bauer Schlichtergroll, had been one of the company's earliest backers, the man who purchased Wirecard out of bankruptcy in 2002. Christopher Bauer was reportedly close to Jan Marsalek. In the aftermath of Wirecard's collapse, Christopher Bauer died in Manila. Philippine authorities officially ruled the death natural causes. He was 39 years old. Jan Marsalek did not disappear. He relocated. Within days of his escape, German authorities sent an extradition request to Russia. Russian law enforcement replied that they had no address for Marsalek and no record of his entering the country. But investigators knew better. For years before the collapse, Marsalek had rented a secret mansion in Munich. The rent was 680,000 euros per year. The location? Directly across the street from the Russian consulate. He spent 15,000 euros on single dinners at the Mandarin Oriental, multiple bottles of champagne at 2,500 euros each. He never once traveled to the United States. He told associates he feared legal proceedings there. He hosted gatherings there, government officials, businessmen, spies. His office at Wirecard was decorated with Russian Ushanka military hats and a set of Matryoshka dolls depicting every Russian leader from Lenin to Putin. Investigations after the collapse revealed that Marsalek had been connected to Russian intelligence since at least 2010. He was a paying member of the Austrian-Russian Friendship Society. His contact there, a professor named Andrei Chuprigin, was widely suspected of maintaining close ties to the GRU, Russia's military intelligence agency. Marsalek reportedly funded operations for the Wagner Group, the Russian private military company. According to investigators, he shared Wirecard's business partner data with Russian intelligence, potentially compromising the identities of German undercover police who were paid through Wirecard's systems. He boasted about visiting Palmyra, Syria, as a guest of the Russian military. "You can be the best spy in Europe," a former Austrian prosecutor observed. "You can be the best crook in Europe, but not both at the same time, without state support." He paused. Putin bought him. According to investigative reporting, Marsalek's cell phone was tracked near Lubyanka, the headquarters of the FSB, Russia's security service, more than 300 times in less than a year. He reportedly made at least 5 trips to Crimea. Sources described him venturing into Ukrainian war zones for combat missions. He uses false identities, including Alexander Nelidov. He reportedly sometimes disguises himself as an Orthodox priest. His Russian teacher, a woman named Tatiana Spiridonova, is, according to investigators, an FSB employee. She is reportedly now his girlfriend. British courts have convicted members of a spy ring that, according to prosecutors and investigative reporting, Marsalek coordinated from Moscow. The operatives, connected to Bulgarian organized crime, had allegedly been targeting journalists and Russian dissidents in the UK. The plots reportedly included surveillance, kidnapping, and assassination. According to these accounts, Jan Marsalek, the former COO of a DAX-30 company, was running the network. The Interpol Red Notice remains active. Germany still wants him extradited. It will never happen. Russia has never extradited a high-value fugitive in Marsalek's position. Dan McCrum won awards for his investigation. He wrote a book. The criminal complaint against him was dropped. Pav Gill received the Cliff Robertson Sentinel Award from the Association of Certified Fraud Examiners, an honor for those who expose wrongdoing without regard for personal consequences. His mother, Sakbir Kaur, never sought recognition. She just wanted justice for what had been done to her son. Fahmi Qadir, the short seller who investigated Wirecard's American operations, made tens of millions of dollars when the company collapsed. She was also punched in the head with brass knuckles by a masked assailant while walking her dog on the Upper West Side of Manhattan. The attacker stole nothing. He was never found. She considers her work exposing fraud a way to use capitalism in a subversive way, something between a civic duty and a revolutionary act. What does Wirecard teach us? That auditors can fail, that regulators can be captured, that politicians can be charmed, that even the most sophisticated investors can be fooled, that a company can be worth more than the largest bank in Germany and be completely fake. A former Wirecard employee, looking back, offered 3 lessons. 1. An employer is not a family, it's just business. 2. Trust is good, control is better. 3. If there are newspaper reports, take them seriously. The German Parliamentary report on Wirecard ran to 675 pages. It documented a collective supervisory failure involving regulators, prosecutors, lobbyists, and politicians. It concluded that German authorities were not fit for the internet age. It was not the regulators who brought down Wirecard. It was not the auditors. It was not the politicians. It was journalists. A small team at the Financial Times who spent 6 years asking questions that no one else wanted to ask. And a mother in Singapore who refused to let her son be silenced. Jan Marsalek remains at large. He was last tracked in Moscow in 2025. The 1.9 billion euros has never been found. It probably never existed.